It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Hi guys, good afternoon. 10th of July 2019, 2:15 p.m. CET. Piotr here, and this is New York Open live market coverage on Liteforex global YouTube channel. It's my pleasure to be here with you guys again today. Yeah, it's hopefully it's going to be busy, and Powell. We are going to get the text of the testimony earlier, so I'm sorry, apologize for it, because we were talking that we are going to have a meeting later because of the Powell, Bank of Canada and stuff like this. But then during the morning meeting when we were covering UK GDP, I get the information. I missed that one. I get the information during our morning meeting that the text of the testimony we are going to get at 2:30 p.m. CET, 1:30 p.m. London, or 8:30 Eastern, right? So here we go. But anyway, guys, don't forget that then we have the Powell's testimony, then we have Bank of Canada, as well as EIA, right? So in regards to yesterday, strong in bull's favor API. Today EIA, we will see especially that the oil is testing significant supply based on the daily, as well as supply based on intraday. We have two levels, and we were discussing a scenario for oil. The risk warning, guys, please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for investors who can sustain a loss of some or all initial investors. So please do not invest the money that you cannot afford to lose. Seek education, gain the experience before risking real money. However, past performance doesn't guarantee future results. Okay, USA. What happened after our morning meeting? Actually, we were quite right when we were talking about the pound right after the UK GDP. If you don't know what I'm talking about, please go to the archive section on the Liteforex global YouTube channel and check our recordings in relation to the UK GDP. We were covering it live. I was long, and it wasn't that bad. Of course, we didn't hit the final target, but anyway, it wasn't that bad. So hopefully something similar is ahead of us. What we are waiting for right now, we are waiting for Powell testimony text, right? And then 4 p.m. CET, we are going to cover Bank of Canada live. We are going to cover Fed Chair Powell testifies live. 15 minutes past Bank of Canada rate decision, we have a press conference, and 4:30 CET we do have crude oil inventories, EIA. In the meantime, also we are going to get its tentative NISER GDP estimate in relation to the UK, but it's not at all that it's all today, not at all. During second part of the US session after 7 p.m. CET, 6 p.m. London or noon Eastern, we do have in US a 10-year bond auction. So after today's Powell testimony, it might be worth to watch what's going to happen with yield, right? We do have Bullard and we do have at 8 a.m. FOMC meeting minutes. So busy whole New York session. So we are awaiting the Powell text within the next 10 minutes. So let's check what Michał wants to tell us about that, right? So give me 1 second, and we are trying to connect with Michał. Hi Michał, how are you doing? You look sleepy.
I look sleepy? No. Hi. I'm pretty good, pretty fine. It's busy day. A lot of things happened. I saw your trade also. Went quite well. Break even, I guess.
Yeah, it was break even, but the small part was closed around 84, as far as I remember. We were discussing this 1-to-1, right? Compared to yeah. So I didn't get the second part, so I cut half, and then it was like, you know, ketchup in McDonald's, even not French fries.
Okay. From where are we gonna start? From the Bank of Canada or the Fed?
No, I think because we have a Powell within the next 10 minutes. The text. So let's start with Powell. Then we will connect again ahead of the Bank of Canada, right?
Yeah. Okay. Sorry. Okay. So I will, like always, shortly, briefly. The investors are expecting that the Fed will cut the rates very aggressively for the 15 basis points, but after those good data, good job report from the last week, but I think that they will not, like we said before about the Trump. I think that in this time will be also the same, that they will not fade into this onto this pressure, and they will cut. They will, if they're gonna say something. I think they will say like this, like they will cut the rates easily by the 25 basis points. Because if they, I have those three scenarios. If they will give up on this idea of the rate cut, I think they have in mind the last time when they done this in the December. Then S&P crashed. And I think it will be like those scenarios are that like the correction, the next. If they will do that, then the correction, and by this correction, I have in mind that they could give an argument for the investors to buy the safe havens like Swiss franc, like gold, and it will also encourage the bulls on euro dollar to go higher and higher, right? So I think, and also if Powell will say nothing about the monetary policy, in this case, I think it will be like yesterday when there will be no big moves on the market. They will like no reaction.
No. I think that we are going to get something today. Because
not tomorrow.
No. I think that we are going to get something about the monetary policy because he's testifying. So maybe no. I think even within the text, within the next 5 minutes, we are going to get something. But then the Q&A. I think that my personal opinion. I've been disappointed yesterday because he didn't mention anything about the monetary policy. Then there was no move as you mentioned. So I've been wrong yesterday. But today there is no way we are not gonna to get anything about the monetary policy. The thing is what you've mentioned. Checking the latest dollar price action from my perspective, so if we are discussing, we still have 4 minutes. From my perspective, I think the latest price action, it was like, okay, we had a quite good, or maybe different word. We didn't get any ugly non-farm payrolls, so it was followed by dollar buying. So my feeling is that market is all in dollar long into the Powell right now. So any kind of the hesitation, if market will feel that just, the small hesitation, boom, we are going to see dollar sell off. The thing is that
I want to mention that they will, like you said, they are all long. They might have to say something about the monetary policy, because on the hopes for the rate cuts, they will not stay long term on the highs right now.
Yeah, I think the key here. Also, we've got busy evening in New York as well. So I think it's all about where we are going to get the daily close. We might see profit taking from long dollar, but the question is where is going to be the daily close, and if we are going to see stronger dollar sell-off, then the dollar bears, they have to push prices below what we've seen pre non-farm payroll. So that might be very, 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 very interesting. We will see. Michał, 2 minutes left. So thank you very much for this first few arguments in relation to the Powell. After the break, because we started 15 minutes later, so our first break is gonna be around 3. Then we will connect again ahead of the New York Cash Open, and I think that 3:45 p.m. CT, we can try to connect again ahead of the Bank of Canada. Is it okay for you?
Perfect for me.
Okay, cool.
Yep.
Michael, thank you.
Thank you for having me. Until the next time.
Yeah, see you
later.
Bye-bye.
Bye-bye.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
All right, guys, less than 1 minute left. Yeah, I'm very curious what's going to happen. And because it's all about the dollar, because the European data earlier today, both the French and the Italian industrial production were monster compared to what we had lately from EU. And again, UK GDP did not disappoint. So I think it's all about euro dollar and pound USD right now. So that's what we are going to watch here, and we will see. Maybe this time we'll see the DJ. So we are going to watch indices, and you know what, Swiss franc might be good one. That's what Michał mentioned. We'll see if it's a safe haven or. So guys, it's coming. It's coming. I don't have anything yet. Pound testing 25, strong sell-off on dollar yen. Now we need to see at least first 5 minutes of that move if it's a real one, and we will try to look for the possibility to join some moves. We have just stop count right now, nothing else. Don't try to chase this market right now. Not yet, in my opinion. Fed will act as appropriate to sustain US economic growth. I wouldn't say it's super dovish yet, but that's what we discussed with Michał. That's what I've mentioned as well. Any kind of the hesitation, market was dollar long ahead of the Powell. Any kind of the hesitation market will get from the Powell, that's what we are witnessing right now. Okay, so as of now, let's have a look what we have on euro dollar, when we can try to join the party. Oh, nice. We are trying to take out post-Friday non-farm payrolls base drop. We are trying to take it out right now. Okay, I think that's the possible buying zone right now. 12:30, 12:25. So that's how I see the things on here on euro dollar. We will try to take the advantage somewhere below 30. If seen. Pound is testing the crucial one above 20. That's what we discussed, above 25 here. That's gonna be interesting if it's just equal move to hit the supply, or if it's going to be something more, right? That's the significant supply here, guys. That's why we don't wanna chase. That's why we don't wanna chase the market here. So I'm trying to put something into the chat window. Please bear with me. Looks like the key takeaway. That's what algo get. Nothing else, at least for now, from that text. Hi, Mer. Hi, Mer, how you doing? What is happening? We have a text from Powell. I'm not sure if you watched our morning meeting. The Powell's testimony is at 4 p.m. CET, but the text we get at 1 and 2:30. So that's why we started earlier. So we were waiting for that text. It looks like it's dollar bearish, but we not quite yet there. Now, from the pound perspective, if we are looking for some kind of the possible demand, that's where it might be. So the overall key That's what we discussed. Payrolls levels. Pre-non-farm payrolls. With this, such a move right now, we are above the weekly open, and I don't know why I don't have the weekly open in a correct place. Oh, not good. I will have to, during our break, I'm going to correct that one. That's gonna be very interesting because it's just 6 minutes. It's gonna be very interesting where we are after 15 minutes and then where we are at the top of the hour. As I mentioned before, guys, that might not be deal done yet. We do have the auction later today. So yeah, first we have the Powell testifying, but then we also have bond auction results. A little bit of upper shadows. That's what we see right now. Trade uncertainties and concerns continue to weigh. Risk weak inflation will be more persistent than Fed currently anticipates. Growth appears to have moderated in Q2. Biz investments growth seems to have slowed notably. All right. Now euro dollar looks like it's trying to take out the latest range, because we are trying to. It's gonna be better visible on 1 minute. Trying to build a flag here. No. Strange. 4 minutes to go towards 15 minutes candle. The cable make equal moves, equal waves. So if that's the case, so let's have a look if we can get this type of the pullback, right? So that's the buying zone we discussed a second ago. Let's have a look if we can get something similar in euro dollar. So that we would see pullback towards our possible demand zone as well. But we're trying to hold the high of that first reaction spike high, as you can see over here. That's what we're trying to hold. So what I would like to see, just, you know, a little bit of the lower shadow below that. Just, you know, test, some kind of the test. It might not happen. It might not happen. Two minutes to go. Ooh, that's the attempt to break. Let's try to, with tiny exposure, let's try to be ready. So some breakout traders already been catched. Some breakout traders were catched over here, trapped. Cable hit the supply. Another high here on the euro, so looks like we're almost ready to break higher. Or another failure. So let's have a look what we have on 15-minute chart. Ooh. Ooh. So again, non-farm payrolls, pre-non-farm payrolls high are key. So it's still far away. Here we are testing yesterday strong supply, and we are trying to take it out. 2490 right now looks like possible. So zone inside the zone. So we have 2502, 2492. That's where we will try to join the party on the pound. All small exposure. If you wanna join, wanna think and check what is going on, only small exposure. The better thing, if you don't know what we are talking about, if you haven't seen webinars we held 3 webinars in June. If you don't know what we are talking about, just paper trading and demo trading. We're testing quite important level from the dollar yen perspective right now, so the bounce possible here. Looks like the guys who are trading, trying to trade towards 109 as the options, that looks like they were countered after the Powell. And if you remember what we were discussing this morning after the UK data and the supply we were discussing on euro pound, looks like right now, of course, it's easier to discuss what is going on differently, what happened. So now it's easy to comment, but frankly, looks like based on what we had during the morning meeting when we were covering live UK GDP, looks like euro pound was better choice than GBPUSD, than cable. We will get back to gold more after the break. At the top of the hour we are going to have a break. Let's have a look where we have the early closes, and we will see what next. And after the break, if you don't mind, after the break we will go with gold. There is another disconnection between indices and gold again. Gold higher, indices higher. Pound doesn't want to pull back. Taking out the supply, I may try to chase that one a bit. around the top of the hour. If we close above the supply from yesterday, if we are going to close above this supply from yesterday, I may try to chase. Then the next supply is 25.30, 15 pips from here. Not good. Just one more time, guys. That's what we discussed ahead of the Powell with Michał. I also mentioned that market was dollar long ahead, so any kind of the hesitation and we are going to see profit taking, and we have this long dollar profit taking going on right now. For me, I haven't found the space to try to join that pair yet. Hopefully we are gonna to have something around the top of the hour or right after. Yeah, but we quite didn't hit the levels we were discussing, 1385, 1382, the bottom of that range, and we didn't hit that one. So that's, you know, that's always tough trying to buy in the middle of something, unfortunately. Oh, looks like closer we are going towards the end of the hour, the higher and bigger dollar sell-off we have. In our June meeting statement, that's from Powell, we indicated that in light of increased uncertainties about the economic outlook and muted inflation pressure, we would closely monitor the implication of the incoming information for the economic outlook and would act as appropriate to sustain the expansion. Many FOMC participants saw that the case for a somewhat more accommodative monetary policy had strengthened. Since then, based on incoming data and other developments, it appears that uncertainties around the trade tensions and concerns about the strength of the global economy continue to weigh on US economic outlook. Inflation pressures remain muted. Missed euro. I'm a little bit slow today. Have to wake up. So I haven't seen any kind of the test here. Looks like I missed that one. So let's check what we are going to get in case of the retest. You know, that's the minute chart. Frankly speaking, the 1 hour is the driver, and we are approaching NFP levels. So guys, if or maybe no, different words, we are going to see dollar weakness is going to be real only we are going to close the day above pre-NFP levels. Everything right now is just quick profit taking from longs. Guys, one more time, market was long into the Powell. So I'm not gonna chase longs here when we are approaching non-farm payrolls levels, because I'm pretty sure that's gonna be some kind of the at least reaction, some kind of the demand might be here. So for sure we broke this equal waves on the pound. Yeah, it's broken. On the euro dollar is broken as well. So looks like something is going on. We might see some kind of the changes. Now let's have a look if we can get that deep correction. And look, we are approaching top of the hour and we are building upper shadow. Euro dollar, pound. I'm not gonna be surprised. I'm not gonna be surprised if we are going to see a little bit bigger pullback on euro dollar and pound. We might see some kind of the bearish dollar activity from the White House administration. If you remember yesterday, so you know what I'm talking about. All right, guys, charts are going to stay with us. If I'm gonna do anything at the very beginning of the next hour, you'll be able to see it. Right, 20 minutes past 3 p.m. CET, so 10 minutes ahead of the New York cash open. All right, we are going to check what is going on with indices. Then we will check the majors, and then we will prepare ourselves for Bank of Canada. Right, so we will connect with Michał again. I think I'm pretty sure it's not the end of the fireworks today, so stay tuned.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Hi guys, welcome back. Second part of our meeting today. We got Powell text, a little bit of hesitation, a commodity approach is possible, and we've seen long dollar profit taking. That's during the when we connected with Michał. We've heard Michał comment, then I add my feeling. And I've mentioned that we were approaching long dollar. So in any case of the hesitation, market will use that as a good excuse. Now, of course, we have to get back to what we discussed, where we are. Because right now, there is nothing else going on, just profit taking. Now, euro is approaching fast towards pre-non-farm payrolls levels. Pound got a little bit higher these levels. So still, if we are talking about the 25 basis point cut and then wait and see stance, we are not gonna see huge dollar sell-off. But if market will switch to 50 basis cut, then yes, we might see more fireworks, right? Now, very important in my opinion, of course, within the next 35 minutes, we are going to get this testify Q&A, everything like this, right? But also, important is gonna be reaction towards London fixing, and another reaction we are going to get at 7 p.m. CET or 1 p.m. Eastern, when we are going to get 10-year bond auction results in US, right? So very busy day ahead, guys. Now, we had quite strong hourly closes, right? Now, ahead of the cash open, I'm looking to buy pound because we close above this manipulation point. That's the retest is going on right now. And I'm looking for a good excuse to try to buy cable. All right. If I'm going to see the retest again, that might be something. Nothing unusual here on euro yet. But it looks like pound is just a little bit stronger. So pound is testing 89.80, 89.75, the zones we were discussing this morning ahead of the UK GDP. So it might be, we are ranging here. In case of a break of 89.70, pound might speed up overall the strength. So, pre-market, Powell's pour the indices rallies, but I know maybe I am just one on the market thinking that way. The rest is so bullish. But I think that what Powell was trying to say was that the stocks is a little bit too high as well. So talking about this weakness, global weakness, I think, yeah, right now it's easy to push the market higher, pre-market, not huge volume, right? Now, that was the strong here. DJ. Strong comeback. After payroll sell-off, strong comeback into the close. And then sell-off Monday, Tuesday. Half of the Tuesday, a little bit of recovery, and current move, pre-market move, it's almost equal to what we've seen on this rally towards the end of the Friday. Now, there is a little bit more space here, so I do expect attempt to break higher above pre-market high, right? So we know where we are. And that range here, this candle, this rising candle on 30-minute chart, the range here might be the key in my opinion. Or we are going to break all correlations we had for quite some time. So we are going to watch first 5 minutes. This time we are going to watch DJ. Then we will connect with Michał around 3:40, 3:45 p.m. CET, 15 minutes ahead of the Bank of Canada rate decision, right? And we will cover Canadian dollar and we will cover Powell testimony. So 1.5 left, but let me get back into the pound. Jeez, we need to hold that one. Stop should be below 25. That's 1-to-1 because first target is around 35. Jeez. There is attempt to engulf, but the broken swing low 33. Jeez. Challenge. The next challenge. Plenty of challenges. Or maybe deeper pullback towards 2480 to make this over under in place. Oh, tough. All right, so let's watch first 5 minutes on the DJ, and the US cash market officially is open. So soon we are going to get an answer if markets scare, if Powell scared the market or no, not at all. I think we might hit pre-market high. Now euro is trying to rally, but again, it's so close to pre-non-farm payrolls levels, so there is no reason to try to chase it. Yeah, frankly, this rally base break retest, that's what I missed a little bit here. Last minute of the first 5 minutes trading range. Now the question is, the market will try to create upper shadow. Now we are testing this broken level, and it might be treated as a manipulation, but we might also see this type of the pullback. It's gonna be 24.90, 24.85. What I'm talking when I'm talking about the manipulation is this early chart and this sell-off from here, yesterday's sell-off from here. And we're testing weekly open. Jesus. 50 points. Just 50 points. First 5-minute range. So 27 might be the target ahead of the Powell. This pre-non-farm payrolls high, those stops around here, that, yeah, actually that might be the case. All right, so we are trying to break the range on the pound over here. Market is trying to tell us that it's going to get back to 25. We have to prepare ourselves for Canadian dollar. Now the question is if we are going to hold the zone based on this manipulation, the sell-off we've seen yesterday. If we are going to give up here, so let's have a look if we can join somehow. Maybe if we are going to get the close above on 5-minute chart, looks like we want to try to get back. No. Okay, no. So let's wait for 25, 24.90, 24.85. In the meantime, let's try to connect with Michał. Let's discuss first reaction after the Powell, and let's discuss what may happen ahead of the Bank of Canada, and what might be the market reaction after the decision. So please give us a few seconds. I'm trying to connect with Michał. Hi Michał, hi again. Good to see you.
Hi. Hello. Same to you, I would like to say.
Michał, tell us what do you think about the Powell? If you have one or two sentences, something you expect, or is something a little bit surprise for you?
Yeah, I must say that today you were right and I was wrong. What I can say about the Powell, that it was a strong dollar sell-off. I didn't expect that, and I didn't expect also that by that the indices will be like the Nasdaq will gain, and yeah, as you said, they don't want to see the indices to fail. So I am also waiting for the minutes, what they will bring to us. And yeah, I think that you have mentioned all the details, all the outcomes. I don't have nothing to add. Oh, I can say that.
Okay, guys, we got back inside the trading range. I took very tiny pound USD long. My stop is around 6 pips. My exposure is very little. I'm trying to target this 25.32 from here. So I'm trying to target around 18 pips. I've got 6 pips stops. So it's like 3 to 1. It's very risky, very speculative. But it's, I got a little bit left after the morning trade. So really the exposure is very low. Let's have a look if this false break here out of that range may bring us higher on the pound. Let me check, because we were waiting for a nicer GDP out of UK. And nothing has happened yet, or maybe I missed something. No, not yet. So in the meantime, yeah, let's have a look if you can get continuation of this dollar sell-off. Still long way for the cable towards the pre-non-farm payrolls levels. So I think the swing low from the daily, that's what we discussed before as a target. Let's have a look if we can get it. And then if we are going such a nice daily close, wow, the things may get interesting tomorrow. All right, Michał, that's all about the Powell. We are awaiting his testimony, so we will discuss what is going on with the dollar after the top of the hour again. But we are awaiting a Canadian Central Bank rate decision. What do you think about it?
But I want to mention that also one of the viewers said that the gold was a good choice. I can't I can't live with that I missed this opportunity. I was mentioning it before, but this move just shocked me, and I didn't took either the euro dollar, either the gold. But okay, let's head into the Bank of Canada. It's pretty simple, I think. From what I learned, that they want to keep this passive and soft policy. They said that the factors that they would push them to cut the rates or raise the rates were the housing data, the international trade policy. And what we saw that in this week and the last one, that some of them were good and bad. The housing data wasn't that good, but the trading data, the balance was pretty good. It was on plus for the Canadian. So I guess it will, and also what we also the data from the unemployment wasn't that good. So it was like the mix of good and bad data, and these are the factors that could push the Bank of Canada to the decision. But there is also one but. The chairman Powell is still optimistic, and he is expecting the growth in the last period of the year, growth of the export of the housing market, and I think on the investment in the last year, and I think they saw the last time when they started to tightening the monetary policy, they saw that caused the slowdown of the wages, the housing market was weakening, and I think they will be still the passive and trying and having this soft monetary policy to just sit and wait and then eventually react.
Okay,
How it will go in the market.
Okay, thank
From
you.
what
Looks like the USD CAD market is exactly on your side, because looks like over the course of the day, of course, we have a dollar sell-off, and right now we've seen this daily black candle on USD CAD. Looks like market is going with Michał. We are just testing the weekly open. Blue dotted line is a weekly open. Looks like market is expecting Polos is gonna be very, very optimistic. One thing, so I have to be a little bit contrary into what you've said.
as always.
Otherwise, it wouldn't make sense, right? To have a discussion.
That's right. No fun.
Again, so a little bit in contrary, I think that they will try to follow, or they are following the neighbor. I mean, they are following Fed, and I think we are going to get the best for Canadian bulls, Canadian dollar bulls. The best we are going to get neutral stance. I think we are going to see something similar to what we get from Powell lately, meaning I smell a little bit of dovish wind. In that case, we are in a very good position here to try to push Canadian dollar lower from here. Now, the very important question is, with the current euro-dollar situation, right, where the euro is stronger, maybe the better choice. I've been stopped on the pound, but it was really, really tiny exposure. So I will try again closer to 24.90. The real question is if we should choose USD CAD or maybe Euro CAD. And we were discussing Euro Canadian yesterday for quite some time. So let's have a look what we have on Euro Canadian here. 1 second. And that's the Euro Canadian. And what we were discussing, the possibility of swing low creation, but we didn't quite hit the levels we were discussing yesterday. So in that case, I'm talking about the Friday low. So there's some kind of the mix of Friday low, weekly open. So we are talking about the levels in between 46.70, 46.50. That's what I'm gonna to watch for eventually for the from the weekend Canadian dollar. From the weekend Canadian dollar perspective, let me change few lines here just for us to have everything in place correctly. So yeah, that's how it works. Now let's switch to the hourly chart, and what I'm gonna look for, that's something we discussed yesterday as well in EuroCAD. It was the latest sell-off, the place where we've seen the latest sell-off, right? That was this level, and it's correlated with this swing low on a daily, and it hasn't been tested yet. So what I see is initial reaction. I see stronger Canadian dollar, and then eventually the counter move, meaning that at some point Canadian dollar will weaken. Now, we have to be, with my view, we have to be very careful, because there is one piece of puzzle we are going to get news about as well, and I'm talking about the crude oil. And yesterday, private data API was in favor of crude bulls, right? And within the next 40 minutes, we are going to get the official EIA data release, and we are approaching, that's what we discussed this morning, we are approaching supply based on the intraday chart, very nice 50, above 59.50, and then we have very old supply from the daily above 60. So yeah, it's very interesting what we are going to get. So very cautious with Canadian dollar. It might be that we will wait for the press conference and EIA data. Anything else, Michał?
I have one question for you.
Yeah.
Despite the Canadian dollar right now and the pound in the morning, but what I saw, could you go to the Aussie New Zealand dollar chart? I saw that also the immediate reaction on the Powell speech release.
Aussie Kiwi, right?
Yes, Aussie Kiwi.
Aussie USD is testing supply.
Why maybe it will be maybe interesting for the viewers, like why did it reacted so hard as the other currencies, but not correlated with US dollar? Do you know something? Some insight?
Whoa, I don't know. I haven't seen anything.
It
might be that because of the dovish Powell, we simply saw the big spike on Kiwi dollar. Let's have a look what we have here. Yeah, the big spike over here. There was a big selling order during the Tokyo session on Kiwi, and they're trying to hold this. Jesus, plenty of that's what
very busy day.
Yeah, plenty of different charts, plenty of different lines. So they hit the demand. Thank you, Michael, for pointing that out. I'm going to check it out. I'm going to check it out for sure. So we are going to discuss. Eventually, we are going to discuss that one tomorrow morning during the pre-London Open. All right.
All right. We can agree to that.
Okay. Appreciate your comments. Thank you very much. Anything would you like to add?
No, I think that's all.
Okay, so let's wait for Bank of Canada rate decision, and we are going to have a fun tomorrow during our next conversation, and we'll see who was right this time, right?
That's right. Okay, so to the next.
Michał, thank you very much. Have a great rest of the new year session. Thank you. Take care. Goodbye. All right, so we have 5 minutes. We are going to watch for sure EuroCAD and USD CAD. We are going to watch for sure crude, and of course I'm going to monitor pound. Yeah, we have an option expiration right now, and I wonder what we are going to get closer to the London fixing. So we broke this manipulation level again. Didn't work our way, didn't work my way. So the next level is closer to 24.90. That's what we discussed before, and that's the yellow zone over here. That's next level, and we are going to put a few more lines. So again, trying to explain my previous decision with the pound, it was I've been watching again. That was the sell-off zone, which has been taken out. I thought it looks like it was not enough to the upside. I thought that on a pullback we are going to hold that one. So basically, I didn't, just to be perfectly clear, right? I didn't do the analysis on the 1 minute. What I did, I've been watching if there is a any attempt to get back into the range. That was the decision, very tight stop, 6 pips. Unfortunately, nothing has happened. Again, exposure was low, 6 pips stop. So looks like I gave up what I gained this morning during the GDP. Anyway, still watching this cable, and from the 5-minute chart perspective, right? Execution based on, of course, based on the higher time frame, based on what we have from the higher time frame. Just that's the important thing. And the size of the preview after the initial spike higher today, correction. So now I measure the size of that correction. We'll see if we are going to get something closer to 24.95.85, and that's where I'm gonna to look for the pound again. Eventually, in case if someone wants to ask where I'm going to look to fade any kind of the pound rally, of course closer to pre-non-farm payrolls levels. Euro dollar, we are approaching possible buying zone. As well, we'll see. But right now we have a 2 minutes. I'm going to check if there is a Powell speech on the YouTube. On Fox Business, it looks like it is. So here you got the link. So one more dip and should be fine with cable. So finally we saw move ahead of the Powell on stocks as well. So all buyers been invited already to the party, and we did it. So we double it at least once. So we are testing 2670 in case of double. I'm going to listen Powell. If it's going to be too loudly for you, or it's gonna be too big noise for you, let me know and we'll try to do something about it. So there is no initial reaction to the upside on the Canadian, immediately sold off. So we tested weekly open, so that might be the case. We might not see big pullback here. Oh, all right. So let's try to be around 31. let's, yeah, 31. Come on, Canadian. $1.75 as expected. We have a press conference soon, we'll see. So while we are waiting for Powell, I think we might do short break right now. If I'm going to do something, you are going to see it. So second time, bar is open, but I think more fireworks ahead. Bank of Canada press conference, official oil EIA. So more to come. Stay tuned, and of course enjoy the break.
3 times. So I'm, you know, I'm not for the water and power carve out. I'm not for that.
Okay.
So I think we got to start over and figure out.
Okay, I'm gonna have to open the
You guys
committee
get
now.
your machines and the rest of the stuff down.
The committee will come to order.
Oh, y'all figured that out. Yeah.
Without objection, the chair is authorized to declare recess of the committee at any time. This hearing is entitled Monetary Policy and the State of the Economy. I now recognize myself for 4 minutes to give an opening statement. Today, this committee convenes for a hearing on monetary policy and the state of the economy. Chairman Powell, welcome back. Today, I'd like to start by addressing the current elephant in the room when it comes to monetary policy and the Fed. This president has made it clear that he has no understanding or respect for the independence of the Federal Reserve. He has said the Fed, quote, doesn't have a clue, quote, unquote, and called it the most difficult problem for the U.S. According to media reports, he has discussed firing Chairman Powell, just as he has fired others he does not agree with. Let's be clear. It is essential that the Federal Reserve maintain its independence from the executive branch. And so, I urge Chairman Powell and other Federal Reserve Board governors not to submit to the high-pressure tactics of this president, who continues to push reckless and harmful economic and social policies. Another issue I hope Chairman Powell will address today is Facebook's recently announced plan, along with 27 other companies, to develop a cryptocurrency and digital wallet. I and other Democrats on the committee have raised concerns that Facebook's planned products may ultimately be intended to establish a parallel banking and monetary policy system to rival the dollar. In a letter last week, we asked Facebook to agree to a moratorium on any movement forward on its plans to create a cryptocurrency or digital wallet. I believe that Facebook is planning what they're planning raises serious privacy, trading, national security, and monetary policy concerns for consumers, investors, the U.S. economy, and the global economy. But Facebook's foray into this field should signal to all of us that our current system of regulation lacks adequate coordination, safeguards, and attention to cryptocurrency. Chairman Powell, the Fed should be a leader on this issue and should not take a wait-and-see approach when it comes to examining a financial system involving 2.4 billion people. So I look forward to hearing your views on Facebook's plans to create a cryptocurrency today. Another issue I would like to discuss is bank deregulation. I remain concerned about the Federal Reserve's actions to weaken safeguards that Congress and Chairman Powell's predecessors put in place following the financial crisis. Specifically, it appears that the Fed may be following the Trump administration's deregulatory plan to weaken the capital and liquidity buffers of some of the largest banks. As I've said before, I believe this to be ill-advised, particularly when many economists, including economists at the Federal Reserve, believe that current bank capital levels are on the low end of what would be necessary to withstand another financial crisis. I look forward to your testimony and to discussing these matters with you today. The chair now recognizes the ranking member of the committee, the gentleman from North Carolina.
Hi guys, again, third and last part of our meeting today. As you've seen during the break, we made this equal correction down on cable and I took it again. Yeah, a little bit of the upside right now. So in case of covering here, just I would recover the previous losses. Anyway, it looks like we do have testimony, Powell testimony in the background. If it's too noisy, let me know.
The Fed concluded that
I'm gonna to listen. It might be very interesting because it's gonna be about the pressure from the White House administration. It's gonna be very interesting from the cryptocurrency traders' perspective because we are going to touch Facebook project Libra. So it might be very interesting, and especially if you see what is going on with Bitcoin right now, most probably it's related to what we've heard here at the very beginning of this testimony. So guys, it's gonna be very busy afternoon, so be careful, don't chase the market. Yeah, let's have a look what we are going to have
last
here.
hearing, for instance, the chairman noted that the Fed continues to support its current inflation target. But as we know, there are numerous proposals that would affect how the Fed might pursue that target. I hope that the Fed will approach such proposals with an appropriate level of prudence, given the limitations of central banks' toolkits at this point in our economic cycle, until we fully understand how those limitations have emerged and how they can reliably be overcome. So finally, let me reiterate my concerns shared by the Fed itself, that global economic uncertainty could result in headwinds here at home. Prior to our February hearing, the Fed made clear that Europe and China represent the risks that the Fed would continue to monitor and, where appropriate, work to mitigate. I hope we can touch on those things today. Let me highlight China in particular. When the chairman last appeared before our committee, he noted that the Chinese economy is state-run, but that Beijing has also attempted to make certain market-oriented reforms. I'm concerned that these reforms may not be deep enough. When the world's second-largest economy is a one-party state without the rule of law, without transparent decision-making, where monetary policy and allocation of capital bends to politics and cronyism, where 1 million citizens can be locked up in camps, while another million take to the streets to defend their freedoms, then we all need to focus on that country and its regime as a unique source of risk to the global stability and global growth. So I would encourage the chairman to work with his colleagues, both here and abroad, so that we have a sufficient understanding of China, and as well as a sufficient set of tools within central banks if something were to go wrong. And again, thank you, Chairman Powell, for returning today. Thank you for your responsiveness. Your candor is welcome and encouraged. We thank you for attempting to speak like a normal human being, even amidst very complex financial markets and complex decision-making.
From the gold perspective, yeah, we got back this time from the bottom of the range into the middle of the range. There is a small supply level, possible supply level.
Thank you, Madam Chair.
In between.
We're pleased to have you here again, Mr. Chairman.
14, 11.
I wanted to discuss the impact of this trade war over 500 days in this
and
trade
14,
war.
15. I would be careful with everything below 15.
Concern I'm having is that this administration is very publicly trying to force financial markets and the Federal Reserve to lower interest rates to offset what I think to
there
be
you go,
irrational
and that's the middle of the range, Mayor. So
poor
be
fiscal
careful.
Policies, and the issue for me is that in January I will have been on this committee for 15 years, and I have never seen a president meddle in the Federal Reserve as this.
Oil, in the meantime, ahead of the data, almost hit the second intraday supply. That the one we discussed this morning. We are discussing API private inventory was in favor of bulls. So pre-market we were trying to go higher with all this accommodative approach from the Powell. We hit stops, we went higher, and we are approaching the strong.
Thank you, Madam Chair.
Supply
Chair Powell, welcome back to the committee.
59.50.
Because of the tax cut and regulatory reforms, the U.S. has seen unprecedented economic growth, wage growth, as well as record low unemployment and stable prices. And since the last time you were here, we've seen a mostly steady economy with unemployment at 3.7% and consumer prices only edging up about 0.1%. But I've heard anecdotal evidence of
Yeah,
slowing
I have the same
investment and price
exposure,
increases. I want to thank you for
0.2,
your
but a
steady
little
hand
bit
on
higher
monetary
risk.
policy.
But in case of
That's an important part
12
of our
pips, so
economic
25.06,
success. And while
I
acknowledging the
might
recent
recover
success,
the
I
previous
know the
loss as
FOMC
well
meetings
as
have pointed to
take
uncertainties in economic
something
outlook, meaning that
out
your
of the
data may be
table.
telling you
So
the same
I
thing
took
I've
it.
been
I
hearing.
took it.
I do agree with Chair Waters that I want to hear about your
So
perspective
overall,
on
taking
Facebook's
into the
cryptocurrency
consideration the
effort. They are
morning
attempting
pound
to
trading,
undermine the dollar
the
as
first
the world's currency.
trade during the New York
I
session
also am
with
interested
the loss,
in
I
hearing
took this
your views
profit
of where
here
we
and
are in the business
overall
cycle
little profit
and
right
what we
now.
can do to support you on fiscal and other policies. I yield back the balance of my time.
Thank you very much. I want to welcome to the committee our distinguished.
Don't forget we have a
Mr.
Bank of
Ron
Canada
Powell,
press conference. We have a
Chairman
little
the
bit
Board
of the pullback
Governors
on
of the
Canadian
Federal
dollar.
Reserve System.
We
He has
have
served
a
on
little
Board
bit
of
of the
Governors
pullback
since
towards the
2012,
trading first
and
5
as
minutes
its chair
top
since
trading range on the
2017. Mr. Powell
DJ.
has
So we
testified
doubled it, we
before
pull
this
back.
committee,
Right now we're
and I
trying to
believe he
test it.
does not need
But
any
guys,
further introduction.
I've heard, I'm
Without
not sure if you
objection,
heard,
your
I've heard what they are
statement will
gonna
be
to talk
made
about.
part of
It
the
might be a little bit of the mess around the
I will now
London fix within the
recognize
next
for
40
taking
minutes.
oral
So
testimony.
right now we are waiting official EA release. So we are going to see what oil is doing, and then we will try to connect with Canadian dollar, and we are going to check the press conference, and we will try to, based on this, immediately live to create some kind of the scenario. We'll see.
The goals of maximum employment and price stability that Congress has set for us for monetary policy. We are committed to providing clear.
So looks like the decision to cut the pound here was good,
Congress has given us an important.
at least for now. Let's have a look if we can get the retest of again 24.95, so we can rebuild this.
Analysis and data. We appreciate that our independence brings with it an obligation for transparency, so that you and the public can hold us accountable. Today, I will review the current economic situation and outlook before turning to monetary policy. I will also provide an update on our ongoing public review of our framework for setting monetary policy. The economy performed reasonably well over the first half of 2019, and the current expansion is now in its 11th year. However, inflation has been running below the FOMC's symmetric 2% objective, and cross-currents, such as trade tensions and concerns about global growth, have been weighing on economic activity and the outlook. The labor market remains healthy. Job gains averaged 172,000 per month from January through June. This number is lower than the average of 223,000 jobs per month last year, but above the pace needed to provide jobs for new workers entering the labor force. Consequently, the unemployment rate moved down from 3.9% in December to 3.7% in June, close to its lowest level in 50 years. Job openings remain plentiful.
So if you have friends who are interested in crypto trading, they definitely should listen to that testimony.
Have been more widely shared in recent years. Indeed, wage gains have been higher for lower skilled workers. That said, individuals in some demographic groups and in certain parts of the country continue to face challenges. For example, unemployment rates for African Americans and Hispanics remain well above the rates for whites and Asians. Likewise, the share of the population with a job is higher in urban.
Wow, looks like it was almost to the peep.
Over the past
The
decade.
decision to cut off
A box in
the
July
pound.
monetary
Looks
policy
good so
report
far, so
provides a
good.
comparison of employment and wage gains over the current expansion for individuals with different levels of education. GDP increased.
Green Day is always Green Day.
3.1% in the first quarter of 2019, similar to last year's pace. This strong reading was driven largely by net exports and inventories, components that are not generally reliable indicators of ongoing momentum. The more reliable drivers of growth in the economy are consumer spending and business investment. While growth in consumer spending was weak in the first quarter, incoming data show that it has bounced back and is now running at a solid pace. However, growth in business investment seems to have slowed notably, and overall growth in the second quarter appears to have moderated. The slowdown in business fixed investment may reflect concerns about trade tensions and slower growth in the global economy. In addition, housing investment and manufacturing output declined in the first quarter and appear to have decreased again in the second quarter. After running close to our 2% objective over much of last year, Overall consumer price inflation, measured by the 12-month change in the price index for personal consumption expenditures, or PCE inflation, declined earlier this year and stood at 1.5% in May.
Guys, I told ya,
Core PCE
Powell
inflation
might scare the stocks.
food and energy prices and tends to be a better indicator of future inflation, has also come down this year and was 1.6% in May. Our baseline outlook is for
That's the
economic
first
growth,
5-minute
solid
trading
labor
range. We are
markets
trying to hold the top of that range.
inflation to move back up over time to the committee's 2%
The key
objective.
is
However,
daily
uncertainties
open,
about the
cash
outlook
daily
have
open,
increased
don't
in recent
forget.
months. In particular, economic momentum appears to have slowed in some major foreign economies, and that weakness could affect the U.S. economy. Moreover, a number of government policy issues have yet to be resolved, including trade developments, the federal debt ceiling, and Brexit. And there is a risk that weak inflation will be even more persistent than we currently anticipate. We're carefully monitoring these developments and will continue to assess their implications for the U.S. economic outlook and inflation. The nation also continues to confront important longer-run challenges. Labor force participation by those in their prime working years is now lower in the United States than in most other nations with comparable economies. As I mentioned, there are troubling labor market disparities across demographic groups and different parts of the country. A relative stagnation of middle and lower incomes and low levels of upward mobility for lower income families are also ongoing concerns. In addition, finding ways to boost productivity growth, which leads to rising wages and living standards over the longer term, should remain a high national priority. And I remain concerned about the longer-term effects of high and rising federal debt, which can restrain private investment and in turn reduce productivity and overall economic growth. The longer-run vitality of the U.S. economy would benefit from efforts to address these issues. Against this backdrop, the FOMC maintained the target range for the federal funds rate at 2.25% to 2.5% in the first half of this year. At our January, March, and May meetings, we stated that we would be patient as we determined what future adjustments to the federal funds rate might be appropriate to support our goals of maximum employment and price.
So, let's have a look what we are going to get here.
We're mindful of the ongoing cross currents from global growth and trade.
Oil.
There was tentative evidence that these cross currents were moderating. The latest data from China and Europe were encouraging, and there were reports of progress in trade negotiations with China. Our continued patient stance seemed appropriate, and the committee saw no strong case for adjusting our policy rate. Since our May meeting, however, these cross currents have reemerged, creating greater uncertainty. Apparent progress on trade turned to greater uncertainty, and our contacts in business and agriculture report heightened concerns over trade developments. Growth indicators from around the world have disappointed on net, raising concerns that weakness in the global economy will continue to affect the U.S. economy. These concerns may have contributed to the drop in business confidence in some recent surveys and may have started to show through to incoming data. At our June meeting, we indicated that, in light of increased uncertainties about the economic outlook and muted inflation pressures, we would closely monitor the implications of incoming information for the economic outlook and would act as appropriate to sustain the expansion. Many FOMC participants saw that the case for a somewhat more accommodative monetary policy stance had strengthened. Since then, based on incoming data and other developments, it appears that uncertainties around trade tensions and concerns about...
Let's have a look if you can get the spike to the upside and if it's going to be faded. Talking about the oil.
Muted. The FOMC has made a number of important decisions this year about our framework for implementing monetary policy and our plans for completing the reduction of the Fed's securities holdings. At our January meeting, we decided to continue to implement monetary policy using our current policy regime.
Okay, there is a spike to the upside on the oil.
That we are prepared to adjust any of the details for completing balance sheet normalization in light of economic and financial developments.
So we hit the supply, we hit that supply.
At the March meeting, we communicated our intention to slow, starting in May, the decline in the Fed's aggregate securities holdings and to end the reduction in these holdings in September. The July monetary policy report provides details on these decisions. The report also includes an update on monetary policy rules. The FOMC routinely looks at monetary policy rules that recommend...
DJ got back inside the first 5-minute trading range.
...employment rates. I continue to find these rules helpful, although using these rules requires careful judgment. We are conducting a public review of our monetary policy strategy, tools, and communications, the first review of its kind for the FOMC. Our motivation is to consider ways to improve the committee's current policy framework and to best position the Fed to achieve maximum employment and price stability. The review has started with outreach to and consultation with a broad range of people and groups through a series of Fed Listens events. The FOMC will consider questions related to the review at upcoming meetings, and we will publicly report the outcome of our discussions. Thank you, and I'll be happy to respond to your questions.
Powell with questions right now.
I now recognize myself for 5 minutes for questions. On June 18th, Facebook announced its plans to launch Libra.
And we are talking about the Facebook right now.
Cryptocurrency as well as a new payment system, Calibra, which will facilitate Libra transactions. On June 24th, the Federal Reserve's Vice Chairman of Supervision, Randall Quarles, wrote a letter in his capacity as chairman of the Financial Stability Board to the G20 leaders, noting a wider use of new types of cryptocurrency, crypto assets for retail payment purposes would warrant close scrutiny by authorities to ensure that they are subject to high standards of regulation. End quote.
Trying to hold this pre-spike bottom right now.
Priority. Chairman Powell, did the Federal Reserve speak with Facebook about their Libra currency, and if so, were any concerns raised? Does the Federal Reserve have any authority to supervise and regulate what could be the world's largest payment system? Does the Federal Reserve have any concerns about monetary policy with regard to Libra?
Thank you, Madam Chair. We did actually have a meeting with...
All right, we are breaking.
Facebook,
so, what I'm gonna to look for, I'm gonna to look for what is going to happen, because we are going back and retest the previous supply, which should work as a demand right now. We might narrow this one as like this, right, to that pre-overnight spike. So I'm gonna to look for development, and here, if you remember meetings we held in June, educational meetings we held in June, I may try to short on a retest of 59.60. That's what I'm gonna to look for on oil. I'm going to monitor indices very closely. I would like to see what's going to happen in case we are going to test cash open. I'm gonna to see the final reaction after the Powell. I'm gonna to watch euro dollar and pound dollar after the London fix, so within the next 30 minutes. In case we hold the levels we discussed before, I may try to reshort dollar again.
Working group within FSOC.
So that's the plan. Probably I'm not gonna touch Canadian today.
Has already got a working group at the staff level, or in effect has a working group at the staff.
So I'm going to monitor indices, I'm going to monitor oil, and I'm going to monitor euro dollar and pound. I think it's pretty much enough.
Impact that Libra and Calibra have. Do you know what they're doing?
I do believe they are. I know there was a staff level meeting just last week to focus on Libra at FSOC, so all the agencies were there. So I think the answer to your question would be yes.
Do you think that FSOC will designate, or is FSOC considering designating the Libra Association and Calibra either as systemic financial market utilities or non-bank financial companies, and subject them to enhanced regulatory oversight? Are you aware of that?
I think it's early to say. There hasn't been a principals meeting of FSOC since the Libra announcement, and while there have been conversations, I think it's highly likely that FSOC will be taking this on in a serious way, but that is in the hands of the Treasury Secretary who chairs FSOC.
Thank you very much. Mr. Chairman, if you got a call from the President today or tomorrow, and he said, I'm firing you, pack up, it's time to go, what would you do?
Well, of course I would not do that.
I can't hear you.
Well, My answer would be no.
And you would not pack up and you would not leave?
No, ma'am.
Because you think the president doesn't have the authority? Is that why you would not leave?
I have
Very
I've
interesting
said what
conversation
what I
right now.
intended to say on the subject, and what I've said is that the law clearly gives me a 4-year term, and I fully intend to serve it.
Okay, so I hope everybody heard that. With that, I will yield to the gentleman from North.
All right, guys, that might be very interesting second part of the US session.
Chairman
Don't forget, guys, there is a Powell right now.
In
We
your
have
testimony, you said
within the
you'll
next
use
2.5
macroeconomic
hours,
data
we are
to
going to
inform your
get
decision on
the
whether
10-year
interest rates are required
bond
in a
auction
month
result
or not.
from US, and then we
Specific
have FOMC
data
minutes.
would
Guys, don't be
likely
trapped.
lead to you recommending a change
We are
in
trading
rates.
very interesting times. So and we can expect
Between now and the end of the month,
Mr.
there's-
President Trump
there's
Twitter
data
activity
coming on.
after what Powell said
Almost
right
every
now.
thing. You'll have
If you
labor
haven't
market
heard,
data, you'll
he's
have
been asked
quarter
if
GDP,
the President
retail
Trump will
sales,
call
you'll
him
have
today, tomorrow, and will say, "I'm going,
broad range of
I'm
data
firing
for the
you."
next 3 weeks, and we'll be
What
looking
are
at
you
that.
going to do?
Point to any one data
I'm going to
point,
say
maybe
no.
any.
Guys, that might be interesting.
We try to look over longer periods of
Volatility,
time.
I think, with summer
Assess what's
holiday
really
low
going on.
liquidity
More fundamental level.
might be the name of the
That's what we'll
game.
do.
Guys, it was my pleasure again today. We
there's
made, it was
there is also,
unusual.
an
We made
understanding
few
of,
trades,
the market assumption
mostly on the
of what
pound.
Federal Reserve or Markets
Overall,
Committee will do as
a
well.
tiny
You're
profit,
not-
but green day is a green day.
There
Guys,
is-
don't be
we-
trapped.
we look at
Again,
a broad range of
tomorrow.
financial conditions. We don't focus on any one thing, but we
Exactly, Mayor. Everyone tune in Twitter now.
look at
Exactly.
a broad range of things in financial markets.
So a broad range of things, macroeconomic data.
Exactly. So stay tuned, guys. Tomorrow, 8 a.m. CET, we are here again. We are going to cover pre-London
Rational
Open.
and analytical.
Hopefully, fascinating
transparent about how
summer
we're thinking about
holiday
this.
ahead of us.
So along the lines
Guys,
of
have a
transparency,
great rest of the New York session.
the
See you tomorrow again.
velocity of the economy.
Goodbye, goodbye, goodbye.
You speak to, and the larger global macroeconomic issues that are.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Contracts as well. Has the Fed undertaken analysis along those lines about legacy retail contracts and the use of LIBOR?
Yes, indeed we have. And that's a very important part of the project going forward. So we've reached out to representatives of retail users of LIBOR for some time now and are meeting with them regularly and developing plans to deal with it because, as you know, as you pointed out in your letter, a significant quantity of the LIBOR